Hi, I'm Doug Mullally, President of the Bruce Power Pensioners Association. I want to welcome you to the Bruce Power seminar on out-of-province travel insurance. We do have some guests joining us today. We invited the OPG Retirees Association to take part in this seminar, so welcome. I also want to thank Linda Crombeen, PW Chief Steward at the site, for suggesting our guest speaker and for making the initial contact for us. And lastly, I want to acknowledge Bruce Power and their staff for providing the social platform that we're using to put on this presentation. Special thanks to Dwight Irwin and Janelle Blackwell who have held our hands through this process. This has been a devastating year for travel, but hopefully we can start to travel again sometime in 2021. I want to thank all of you for participating today, and a special thanks to those that responded to our request for questions about travel insurance in the early summer. We obviously cannot answer all your questions or questions related to your personal particular policy, but rather information in more generic terms that apply to everyone. Now I'd like to introduce our guest speaker today, Scott McCoy. Scott is a Bachelor of Commerce degree from Queen's University. His 33 years experience in employee benefits and group insurance. He started with Ontario Blue Cross in 1987 as an account executive in employee benefits and group travel insurance. He started McCoy Insurance in 1992, specializing in employee benefits. As an independent broker, he has dealt with a wide range of insurance companies such as Blue Cross, Green Shield, Manulife, Great West Life, Royal Sun Insurance, which is RSA, and many others. His experience servicing a wide range of clients, including the public, private sector, union, non-union, service industries, manufacturing, high-tech, etc. He was the broker consultant who established the initial PWU-sponsored group travel plan with RSA at Bruce Power. This has now expanded to other PWU and society-related employers for active and retired members. So without further ado, Scott, you're on.
Great. Thank you. Welcome, everyone. I'd like to thank Doug for the invitation to present today. Hopefully everyone will find it interesting, and of course everyone who's tuning in to listen. A couple things. I understand, just talking to Doug, we've got quite a few folks that have signed in, and I realize they all have different coverage with respect to their travel insurance. There'll be some folks that are with PWU. They have access to the RSA group travel plan, which I'm quite familiar with. Some folks have a Green Shield travel plan. And then there's another group of people that are no doubt getting coverage on their own through various carriers. So because every carrier is different, I'm trying to give a generic or general. So I've sort of broken the presentation down into just sort of common helpful hints, regardless of the carrier. And then I'm going through the questions as best I can. I will do my best to keep them generic. There might be the odd one. I might sort of default a little bit to the RSA, but it'll still give you a flavor. At the risk of sounding like a lawyer, because every plan is different, plans are subject to change, every claim is unique. There could be two situations that look similar, and a couple fine details can make the difference. So again, everything I'm saying, it's not official legal advice. Please don't phone me up 18 months from now being upset that I said something that wasn't exactly the way it turned out in your claim. But I think you should find it quite interesting. At least I hope so. The other comment with the questions, and by the way, the questions are excellent. There were some very good questions there that I'll be talking about. The one thing though, some of the questions today's presentation is focusing on emergency medical travel insurance. Essentially, if something unexpected, you get hurt, you become ill. That's what we're focusing on today, which is probably the main type. Some of the folks were asking about insurance, which is known as trip cancellation, trip interruption, baggage insurance. That is a different animal, and I won't be getting into that today. It's literally a different type of insurance. So going into just sort of general helpful hints, probably the most important one, if this is the only thing you remember from my words of wisdom today, is read the policy. Everyone should have an employee booklet policy, which goes into a lot of detail. Some would say too much detail, but many of the questions that you have, probably the bulk of them are answered in the policy or booklet. So I can't encourage it enough. Read the booklet. If you don't have one, get a copy of it. If you're not clear on something, admittedly, some of these wordings aren't as clear if you don't do insurance for a living. It gives me a headache, and I've been doing it for quite a few decades. Phone the carrier. They all have 1-800 numbers and ask, I'm not sure what this means in my situation. So don't hesitate. It's better to know than to make a false assumption. Basically, the other thing too is with these travel plans, it's like asking, what kind of engine does my car have? All these policies vary. Some of them could be slight variations. Some of them could be significant. And to make it even more complicated, a lot of insurance companies that offer travel insurance, they have multiple versions of it. Just like you'll find I'll use car analogies, being a bit of a car buff. Just like General Motors has cars with 4, 6, 8 cylinders, the same with travel plans. RSA, for example, we have the retiree plan for PWU. They actually have something like a dozen different travel plans, and they all have differences. So with that, again, read the policy. And the other tip, don't take at face value things you read in the media, what your doctor tells you, what your friend tells you. Number one, they could be outright wrong, or they could be right, but it applies to a different policy than what you have. Again, think about the cars. Just because I have a V8 in my GM, you may not. With respect, when you're getting an individual plan, as opposed to a group plan, such as the RSA or the Green Shield, almost inevitably, especially once you start getting over 55, the insurance company will have various medical questions to ask you. That will determine the rate you'll pay. As you could expect, the more issues you have, more likely the higher the rate. And it'll also determine if you're even eligible for it. With respect to that, be brutally honest. You're better to be over honest, if that makes sense, than to play coy or maybe fudge something. The reason being is, bottom line, if you don't disclose fully and the insurance company finds out, typically what will happen is the policy will be void and they'll give you your money back. And to stress it, even if, to give an example, what often will happen with carriers in general, let's say you maybe fudge an application regarding a cardiac issue, but you're on a beach in an exotic location and a coconut falls on your head. If they find out that you weren't correct on the cardiac question, you'd think, well, that has nothing to do with the coconut that fell on my head. If they find out, they will likely just void the policy, even though the coconut had nothing to do with the cardiac. So again, with travel insurance, be super honest. Top-ups. Again, this will apply for those folks that have a group plan. Again, for example, the RSA, it's good for, depending upon the option you chose, 60, 90, 120 days. Let's assume your group plan, you have a 60-day option, and you plan on being away for 70 days. So your group will take care of the 60. What you would then need is what's known in the industry as a top-up coverage to top up the last 10 days where your group is expired. A couple things with that is, number one, be aware that even if it's with the same company, the top-up portion will be a different product, although it'll be similar. It'll have different fine print on it. So make sure. So you might be fine under the group policy. There could be an issue with the top-up. As an example right now, again, I'm just going to use RSA as an example. There is a travel advisory exclusion on the individual plan, which is your top-up. The group plan, no. So literally right now, whereas normally it's not a problem to top up, literally you can't right now. So that leads me to my next suggestion with top up coverage, get it well in advance. Don't wait to the last second. And in certain situations, you might be able to get it down there, but you risk being not. So do it ahead of time so you know if you have coverage. And if for some reason you can't get the top up, you know to be back early. And the other thing too is when you're getting a top up in general, make sure you tell the insurance company that you're topping up with that this is a top up from the group. Some carriers will do a top up, some will not. So it's important that if you just say, I need coverage from April 15th to April 30th, they're going to assume, well, that's the duration of your trip. If you don't tell them that, oh, I'm actually leaving 60 days earlier, you're topping up a group plan, they may not even do it. So make sure you tell them that. Another helpful hint, the more often than not, obviously costs can be very expensive. Six figures is not unusual. Hospitals know not many people walk around with that kind of money. And unless you've got a really great credit card, you probably don't have that kind of allowance on your card. So more often than not, when you call ahead of time, as you should, typically the insurance company will arrange direct billing with the provider, the hospital. If by chance, sometimes they'll say, look, here's just your bill, you deal with it. It's very rare that they'll say you're not getting out of the hospital until you pay in cash. They'll typically give you the bill. Now, the insurance company should be in the loop anyway, but if you do get that, even if you do have a $100,000 credit limit on your card, do not pay it at source. They'll typically give you 30 days. When you get back, submit it to the insurance company and then they'll deal with it. The reason for that is it's not unusual. Some providers may, shall we say, be somewhat aggressive on their pricing, and it's not unusual for and when the insurance companies settle the claim, often they'll have volume discounts. They negotiate. So a lot of times that $100,000 bill you get, the insurance may negotiate it down to a lower amount. If you pay the full 100, then there could be a problem because you're probably not going to get that back. And the carrier said if you had brought us into the loop, we only would have paid 80. So submit it through the carrier. Don't pay up front. Another general comment has to do with OHIP for a number of reasons. Some of the question mentioned, has OHIP changed with respect to travel? The answer is yes. As of January of this year, OHIP prior to January was paying out of country travel claims. However, the good news is we really didn't lose much. OHIP would pay if you broke a leg in Florida, but only up to the amount that they would have paid had it happened in Ontario. The bottom line is the amount that the government was paying was minimal. I've heard estimates overall OHIP may pay maybe 5% of a claim. So they're no longer paying anything. So there's absolutely no HOPE coverage out of country. My understanding, the one exception to it is they do have some sort of kidney dialysis program that they're running, so you can look into OHIP for that. But the answer is, does OHIP cover you out of country anymore other than dialysis? No, they pay nothing. Also, with respect to OHIP, the vast majority of travel plans, one of the criteria to be eligible for the travel plan is you have to be covered under the provincial healthcare plan, OHIP for Ontario people. The OHIP guidelines currently, in order to retain OHIP coverage, you cannot be out of the province for more than 212 days. I have no idea how they came with 212. But in any kind of, some people think, oh, it resets calendar year. No, it's what they call a rolling 12 months. So in any 12 months prior to a certain point in time, if you've been out of the province for more than 212 days, you will lose OHIP, unless in certain situations you can get an extension. But basically for most folks, try to keep it, well, you should keep it, because the problem is if you exceed the 212 and you lose OHIP, you're then going to lose eligibility for the travel insurance. So again, keep that in mind for the longer stays. Another another question that came up is, do I need travel insurance outside of Ontario, but within Canada? My personal opinion, with respect to if you're going out of the country, Absolutely. I wouldn't even consider, even for to see a movie in the States, it's critical to have travel insurance outside of the country. I've been involved in cases where people have been in needed medical assistance. Literally, we're just getting, something taken care of for a couple of hours in the hospital. It's 15, 20, $30,000. So absolutely, I do not even consider leaving the country without travel insurance. Now, within the country, it's a good idea. It's probably, I would never say don't. It's a good thing to have. It's probably not as critical because, generally speaking, within Canada, OHIP will provide coverage if you hurt yourself in Manitoba or whatever. It is a good idea to consider having travel insurance within Canada. Probably the one exception that OHIP doesn't cover, something they cover in province that they don't cover within Canada, is, and I have no idea why the exception, is ambulance, either ground ambulance and in particular air ambulance, which can be very expensive. So if you don't have travel insurance and you hurt yourself skiing in the Rockies and they have to fly you out, if you don't have eligible travel insurance, OHIP isn't going to help you with that air ambulance. The other reason to consider travel insurance within Canada is over and above what OHIP pays, there's extra benefits, I guess I could call them. That would be things like getting your vehicle back. If you're to qualify under the policy in certain situations, they'll bring a family member to visit you. If things don't go well, they'll get your body back. These are things that OHIP doesn't cover at all. The other question I had with that is if you, and by the way, at least with the, generally speaking, most plans, certainly the RSA one, which I'm most familiar with, typically it does, actually the RSA plan for sure does cover within Canada. So it's a good idea. It's not as critical perhaps, but it's not a bad idea to consider. A couple of other people have asked just for suggestions with individual travel in general, especially if you don't have a group plan. Again, read the policy. Details matter. Just a current thing that I literally noticed last night reading the Globe and Mail is Manulife announced that they're issuing a travel plan either now or in the near future that will cover COVID. However, COVID-related claims are restricted to $200,000 for those benefits. Apparently, WestJet and Air Canada, to help out with their travel sales, they're also offering free travel insurance, which I believe cover COVID, which sounds great and it's better than nothing, but it's limited to $100,000. Personally, it's not sufficient in my opinion. Keep in mind these dollar amounts, either the 200,000 or the 100,000, more than likely those are Canadian funds. So when we go to the States, depending upon the exchange rate, that 100,000 probably turns to 70,000 American. I have literally seen when people have gone into the hospital and, for one or two quick visits, not stayed overnight, no surgery, just a couple of routine tests and follow up. They're in and out in a few hours, 18, 20, $30,000. Just imagine if you were in the hospital with a COVID related thing for weeks and weeks on a ventilator in intensive care, that 70,000 would barely get you a few days. So I would be reluctant. I don't think it's sufficient. In my opinion, I think you should have at least $1 million, in my opinion. The other helpful hint, again, especially those that are getting individual coverage, is the insurance companies. It's more of a niche product. They don't really advertise it a lot, but some companies do have what they call a medically underwritten travel insurance policy. So where this would come into play is, let's say you don't qualify for a mainstream travel product, or maybe you can get it, but there's a very clear, you'll trip the stability clause, which I'll get into shortly. But let's say you would prefer having it. What a medically underwritten travel policy is, it's almost like a life insurance application. The insurance company gets information from your doctor. It's very involved. And then based on looking at a detailed summary, they'll come back and they could still say no, but they could very well say, okay, well, we will cover you, whereas you wouldn't qualify under the off-the-shelf plan. And in some situations, I have had examples where I had a chap, for example, he had a cardiac issue which tripped the stability clause, but under the medically underwritten policy, they said, we will even cover cardiac issues, but it will be limited to $50,000. So it's something. So that's something to consider. RSA offers that type of product. RSA no longer deals with the general public directly. However, anyone that's a member of the Bruce Power Plan, they can have access to this medically underwritten. Where you would typically use that would be one, if you trip the stability clause, or if you needed top up coverage and couldn't get it normally. Manulife Insurance also has a similar product. Again, if you're interested in something like that, do not do it the day before your plane takes off or phone from the airport. It's happened. Something like that, it's like a life insurance application. You have to give yourself lots of time because you have to consult with your doctor and review it. But again, it's something that a lot of people aren't aware of. Another general question, again, there was quite a few of them, is this is, again, referring to those that have group plans, the RSA, and I suspect the Green Shield. A lot of the group plans will say you have X number of days, say 60 days per trip. Some people have asked saying, okay, well, it's a 60-day per trip. If I come back within the 60, how long until it's refreshed and I get another 60 days? Again, you'll see me saying the same mantra, read the policy. It varies. With the RSA plan, literally, as soon as you come back to your province of residence, your home province. So if you're an Ontario person, it doesn't count if you fly from California into British Columbia. You have to come back into Ontario. But literally, you could literally fly into Pearson, grab a burger and a beer, and then fly back again an hour later, and you'd have another 60 days. Now, if you do that, make sure you need to have documentation. So you need documentation when you returned and when you came back. What do they accept? It could be something, an airline ticket, a stamp from Customs, Border Patrol, proving that you came back and then left again. It could even be a receipt with preferably with your name on it, proving that, hey, I bought a souvenir at the shop, it's got my name on it. But however, having said that, I have seen different policies that it'll be refreshed, but you might have to stay in your home province for 24 hours, 2 weeks. It varies. So again, don't assume. So getting into some of the more detailed questions, and again, I'm trying to keep it generic. I will kind of default to the RSA just because I know a lot of folks have it here. The one thing that came up, and I guess it proved to group as well, is with the COVID situation, this is obviously unprecedented. Nobody could have foresaw it. Some people have said, well, I heard you're getting a bit of a rebate on my car insurance, or some group plans are getting a rebate on dental insurance because the dentists were effectively closed. Do I get a rebate on my group travel? The short answer is no, but there is a rhyme behind it. There is some explanation for it. The biggest thing is that this is a group policy as opposed to an individual policy. With individual policies, you can buy it, you cannot buy it. You can renew it every year, take 2 years off, and come back. A group plan is you cannot jump in and out of the plan. That's just the nature of the beast. Now, the trade-off is, generally speaking, with a group plan, yes, you have to stick with it. And in the case of the RSA, once you exit, you can't come back. But the payoff is because we have that stability. And quite frankly, people say, but I'm not traveling this year. And I guarantee there'll be some people that are in the plan that aren't traveling, but they're maybe traveling the year after. And that's the whole idea of group insurance, is that the low claims people support the higher claims, but maybe it'll be your turn next year. But because of that, here's where the payoff is that generally speaking, a group plan will give you better coverage, lower rates, and perhaps even more importantly, guaranteed issue. Now, I was asked to just take a look at a fairly well-known retiree association on the individual side. Now, I want to stress I'm not criticizing it. It's just the nature of the beast because it's individual, not group, so people can pick and choose. But to give you an idea, to give an example of the payoff of the group, this individual plan, I just did a quick summary that if an individual was single, under 70 years old, and wanted a 60-day multi-trip plan. Again, so you can take all these trips as long as you have OHIP for 60 days a trip. Cost-wise, on this particular well-known plan, number one, you have to qualify. You may not even be approved. They stream it into 3 categories for most people. The price ranges from roughly about $530 to the middle one is $1,080 to over $1,500. And even then, depending upon your medical, you may not even get those. They may take a look at it and medically underwrite it. Who knows what the price and the fine print. And again, there's no guarantee you'll even get it. And also in this particular one, COVID is excluded. Nothing to do with COVID will be covered. Now, to compare it, I'll use the RSA plan as an example. Instead of the $500 to $1,500, it's $160. Quite a difference. Secondly, there is no medical underwriting. It's guaranteed issue. Poof, you have it. Now, like any travel plan, or vast majority of them, there is a stability clause. But other than that, you will not be denied if you apply in a timely manner. And the other thing, at least with the RSA group plan, is, and I'll get more into it, COVID is eligible. There is not an exclusion for COVID. So again, when people say, well, how come the individual plans I can pick and choose, there's a trade-off. Again, with apologies to those who aren't in the RSA plan, RSA did help us out a little bit. There was going to be a slight increase. They waived it. There's no change. And also, as an exception, normally we have to renew October 1st. They gave us the option of delaying coverage either till November or December. So again, you can take a couple months off. Having said that, I was asked by the PW just to remind folks, even if you take the December option, which is fine, make sure you still have to get the applications and funds into RSA prior to October 1st. The other option is, some people said, if I'm family, could I go single? Yes, but keep in mind, once you go single, if things open up 2 months from now, you have to sit tight until the next renewal period. So, be careful if you take that option, or your spouse may not be too happy with you. And then the other thing is, in the industry, RSA has been monitoring it, and I've personally seen it. I have yet to see any group travel give any kind of a rebate. It's just, again, the nature of the beast for the reasons I've talked about. Another helpful hint that I mentioned is, again, with some group plans, the PW one, you have an option of 60, 90, or 120. If you think there's a reasonable chance that, I might be going away for 70, 75 days, you have 2 options. You could take the 60 and purchase top up, or you could jump to the next level. My suggestion to you is, if there's a good chance that you'll need more than 60, go for the next higher limit, because again, remember what I said before, if you're relying on the top up, it is a different plan, and it's quite conceivable that someone may be eligible under the group plan, but not under the top up. So if there's even a fairly decent chance that you'll need the extra, my advice would be go to the higher level, because you might not be able to get the top up, or it'll be more restrictive. Going into some of the more detailed questions is probably the biggest one is I tend to use these 2 terms interchangeably, is the pre-existing condition clause or the stability clause. Basically one and the same. Again, we'd be here all day if I read every word of the policy, but again, read the policy. It very clearly states what is defined as that stability clause. Basically, in essence, the most common one is typically, which the RSA plan has, and it could even be more restrictive depending upon the plan. But typically it's, say, 90 days. That's how the RSA one works. And to be blunt, almost anything that pops up, if you are diagnosed with a new condition, you recover from a condition, you get a new drug, you stop a drug, you're given a dosage change, Now, a dosage change, there is one small exception, at least with the RSA, and again, check your policies for the other ones. With the PWU plan, Coumadin, warfarin, which are blood thinners, and insulin or diabetes oral medication, they do allow a tweaking of the dosage. Apparently, I'm not a doctor, but my understanding is it's fairly common that you sort of modify the dosages. So with those, they'll give you that. But other than that, if you have any kind of a dosage change in that 90 days prior, it trips the stability clause. Now, that doesn't mean that you don't have any insurance at all. You can still go. What it does mean is if you trip the stability clause, that particular condition or any complications of it will not be covered. Going back to my coconut on the head, if you have some cardiac issues and they change your meds in the 90 days prior, you're sitting on the beach. If you have a cardiac problem, unfortunately, the plan won't help you. But if it's unrelated with the proverbial coconut, you're good, at least as far as getting your bills paid. Someone was asking the return of vehicle. I have an RV. Does the RV count? Again, read the policy. Using the RSA as an example, they will typically define vehicle with the RSA one. It's 36 feet. I don't know what a typical RV is, but as long as it's 36 feet or less, you're good. Another question was, especially with the COVID, something, again, such as COVID happens, what people are traveling, how do we get updates? Basically, number one, call the carrier. The number will be listed on the back. Yes, I understand because they were flooded with calls, it was difficult to get through. But if you were persistent and tried earlier in the morning, you would eventually get through. The other avenue is with websites. Pretty well all the carriers during the COVID situation were giving updates on their website. The one thing with that, and again, with apologies to the non-RSA folks, there was a bit of confusion in that the general RSA website said because of the travel advisory, your insurance would no longer be valid and you had to come back home ASAP. Again, keep in mind, probably the majority of RSA travel products did have the travel exclusion. The PWU one does not. It was just too much of a nightmare to put, this plan has it, this one does not. Maybe it does, maybe it doesn't. They erred on the side of caution. However, all the folks that had the RSA plan that was unaffected by the travel advisory, each policyholder or employer sent out a memo clarifying that. So example, with the PWU folks, again, I'll mention again, there is a travel advisory. Your plan doesn't have a travel advisory exclusion. And am I covered for COVID? There is not, at least under the RSA plan, a specific COVID exclusion. So what that means in practice, as long as you don't trip the stability clause, for example, you have a high fever, you're coughing, you can't smell, you're about to pass out and stumble onto the plane, you're going to have a problem. But if it pops up, during your trip and you haven't tripped the stability, yeah, they'll treat COVID like anything else. Another excellent question was with respect to prescription drugs and changes. If someone went from a brand name to a generic or to a generic to a brand name, does that count as a change during the 90-day typically stability period? The answer is no. So if you're going from a brand name to a generic, as long as the dosage doesn't change, the carriers don't count that. The rationale being is a generic drug by definition is the exact chemical ingredient. So it's tomato. So that's not an issue. Another good question was, again, with a lot of them were stability clauses, which is probably the most question part of it. The question was, well, I've tripped the pre-existing or stability clause, but good news, I'm getting better. Either I'm taking less of a medication, my dosage has been reduced, or maybe I'm not taking it all. That's good news. That doesn't count, right? No, it does count. Any kind of a change. So even if it's a change for the better, even if the doctor took you off a medication, that is a change. And the reason that they treat as that is, hopefully not, but maybe in retrospect, you shouldn't have come off the medication. So they want to see that 90-day stability. There was a question. I won't get into a lot of detail. It was talking about, we had a plan that didn't have a formal stability clause, and now it does. I've yet to see a plan that is open-ended, that travel plan. So there's no stability whatsoever. We'll cover anything and everything. I just can't see that happening. Typically, a plan may not have a formal 90-day, but more often than not, they'll likely have something in there to the effect of any pre-existing conditions have to be stable at time of departure, as determined by the carrier. So there's usually something. So I just, even above the Green Shield Great West, and even if you hear, I have a plan that'll cover everything, I would be very surprised about that. And I would want it in writing that there's absolutely no stability or pre-existing. It's very unlikely. Another question people were saying, again, this is probably more individual coverage, that what's a good carrier if I want individual travel? There's quite a few carriers out there, many carriers. I don't have experience with all of them. I'm not saying this is the only good carrier, but other than RSA, probably what I would tell clients to consider is, I personally have had good luck with Blue Cross. They're very good for travel insurance. Not saying they're the only good one, but it's one that I've often recommended because I find them pretty good. Things to watch for, people. So again, especially with individual plans, again, don't assume I can't stress this enough, every policy is different, and even policies under the same insurance company. Think cars. You can have a 3-cylinder car, you can have a V8. It all depends. But some general things that I would recommend you look for is starting with the maximums. Remember, I mentioned the COVID specials that were 200 or 100,000 earlier in my presentation. In my mind, you want to have at least $1 million, at least. Some of the costs, it probably defies belief for someone who hasn't experienced it. I've personally seen clients run $350,000. Again, short claims, 30 to 50,000 is not unusual. In talking to insurance companies, they have had claims that have pushed 2 million in one incident. So, but I would want to see at least $1 million, anything less than that. Also keep in mind, typically these maximums are in Canadian funds. So if you're going to the States, you're losing probably about a third of that in exchange. So they convert it over. The pre-existing or stability, a huge factor, and it varies. I don't think you'd get much less than 90 days. That's a starting point. Could be 6 months, it could be 12 months. So depending upon your situation, if you're doing some shopping, if you're stable for 5 months, but you have another carrier that says, well, this one's cheaper, but it's a 12-month. Well, it's a little consolation if your claim isn't covered. This is unusual. I came across years ago, a client mentioned this is a really great policy. It was super inexpensive. Long story short, the stability clause was forever. So literally, if you hurt your knee when you're 8 years old on your tricycle and it flared up, they could exclude it. But that's why it was cheap. Again, it's not a bad product. And talking to the carrier, they said, we have some people that just are extraordinarily healthy. So if they qualify, we can give them a super low rate because they don't have any medical conditions. But it's the same old thing. If it's too good to be true, it probably is. So again, read the policy. Other things to watch for is I would want to see a policy that covers 100% of claims, not 80 or 90%. You want to avoid deductibles, in my opinion. And again, especially right now, the two big things that folks should be looking for is, number one, because there is right now since mid-March, and it's still in effect as of the date of this broadcast, there is a travel advisory basically for anywhere outside of Canada, depending upon the product. So I would ask, number one, does this travel product have a travel advisory? And if it does, it's basically no value to you. Second, if there's no travel advisory exclusion, and I ran into this, I was helping a client when I looked into their coverage, they said, no, there's no travel advisory exclusion, you're good to go. And I said, is COVID covered? No, there was a specific exclusion. Nothing to do with COVID was covered. Even if you pass the stability, if you happen to get it on an extended vacation, you're on your own. So again, I wouldn't do it. You want to have no travel advisory exclusion and no specific COVID exclusion. And that's trickier to find these days. Again, there were some questions. Again, I mentioned earlier, we're not getting into trip cancellation, baggage insurance. Some of the folks said, but does our travel in package include trip cancellation, trip interruption? No, at least the ones that I've seen, certainly the RSA plan, and I'd be surprised if any. The package we're talking about today is emergency medical. As a general rule of thumb, and I've never seen otherwise, trip cancellation, baggage, that's a separate animal. It's very, so it's a different package. Forgive me the shuffling of papers. With respect to, this was an excellent question as well. People have said, what if my doctor prescribes, the example used was baby aspirin, which was a good one. My doctor is prescribing an over-the-counter medication. Now, obviously, if it was prescription drug, of course, it would trip the stability clause. The same thing holds true even if it's for an over-the-counter drug. If your doctor prescribes it, even if it's baby aspirin, that will trip the stability clause if it's within the 90 days. Another excellent question. Do the same rules that a policy has for out-of-country travel apply for in-country within Canada? Yes. So you have to satisfy the stability period to have your travel insurance, even if you're going skiing within BC. I'm running tight on time, so I'm going to try to accelerate this. The other one is, can your doctor authorize you to travel? Basically, override any policy. No. Your doctor cannot say, don't worry what the insurance company says, you're good to travel. The doctor possibly doesn't understand the policy language. The policy applies, even if the doctor disagrees with it. If the policy disqualifies you or has limitations, your doctor cannot override it. The other question, again, which is a good one, as everyone should know, it's critical that before you even get any medical assistance, ideally call the helpline before. There's a couple of reasons for it, and there's actually a help too, that they can also refer you to a hospital. Some are more easygoing, taking direct payments from the carrier than others. They can direct you one that, this particular hospital we suggest because they'll bill us directly. But what if you can't? Minor things like you're in a coma, you can't call. You're in the middle of the Pacific and it's a dead zone. Even the policy acknowledges it. Call before or as soon as reasonably possible. So, once you get service back or you come out of your coma or have someone call, please do not bleed out on the hospital front door trying to get a cell signal through. Take care of your health first and then deal with it later. Phone as soon as possible. One question was, can we get, this is for the group folks, typically coverage goes to, depending upon who we're talking about, 70, 75. Could it be extended? It's possible. It's up to the policyholder to request that. Be aware, though, that the higher the age limit, the higher the risk, and not surprisingly, the higher the premium. One individual was saying, how come they're still punished for a medical condition that happened 10 years ago? By punished, I mean higher rates, even though it's under control and stable. That's referring to an individual plan. And that's just the nature of the beast, that they use your medical history to determine the risk and the rates. Again, it's not really an issue on group plans, but it is on individual. We're almost there, and Doug's going to be giving me the 2-minute warning here. Some folks have said, is there any way we can have a quick one-page comparison of different insurance companies? How about just a quick one-page summary of what I need to know? I understand the sentiment behind it. I hate reading 8 pages as well. The reality is just not feasible. If I was to give you a summary of your plan, by definition, it wouldn't be complete. So if I didn't mention something because I was skipping it and then you had a claim rejected, you would not be too happy with it. So unfortunately, it's just the nature of it. These products can be complicated. There's a lot of money involved. They really can't give you a summary because by definition, they'd be leaving something out. Another interesting question is one individual said they heard from some friends that in the States, they bought a Medivac policy. And essentially what that was, it didn't cover you for any medical expenses other than if you did become ill or sick or had an accident, this policy would get you back to your home province. Obviously, it's cheaper because they're not paying for any medical expenses, they're just getting you back. I'm not personally aware, I'm not familiar with myself. I wouldn't be surprised if they exist. They'd no doubt be cheaper. Even if you could get one, even if it's cheaper, which no doubt would be, I would urge a lot of caution. It sounds good in theory. Will just get me back to Toronto or wherever, and then I'll take care of it. But what if you can't? What if it's a brain clot that has to be dealt with immediately? You don't have 8 hours to get back home. So be very cautious with something like that. I guess the last two questions, and I'll wrap up. I'll get right into the wire. One was a question of alcohol and travel insurance. Excellent question. And again, read the policy. With the RSA plan, for example, if you have a claim, presumably an accident because you were driving a vehicle while under the influence of drugs or alcohol, the plan will not cover it. And that's the extent of it. However, I have heard of plans that the alcohol exclusion is for anything. So anything that happened, if you were consuming alcohol and they could draw a link to it, the classic example is, not that anyone here probably has an alcoholic beverages when they're on holidays, but let's say you had a few too many beverages by the pool, you were impaired, you tripped and fell and had a concussion. There are some policies out there, they won't cover it because you were impaired. So again, read the policy. And I'll quickly wrap up with I'm coming just under the wire, with credit card coverage. As you may know, a lot of the credit cards now have, as part of the package, travel insurance. There were a number of questions saying, are they good or not? It depends. Every single card is different. I have no doubt, I haven't gone through them extensively, no doubt some of them are probably very restrictive. I've heard of some that are only good for 3 days a trip. There's probably some that are fairly good. But again, you can't make an assumption just because your friend said, oh, the credit card insurance is great. Maybe his was. You may have a different coverage. The other thing is, there was one comment saying, I've got such and such a credit card and it's guaranteed issue, no medicals, everything's good. You know what I'm going to say? Read the policy. I would be shocked if there's any policy that's open-ended. It's just, it wouldn't be economically viable for a carrier. Now, what the person told was probably the message intent was, you're guaranteed to get coverage. You automatically get it. We're not going to exclude it. We're not going to ask any questions. However, no doubt if you read the policy, I couldn't imagine there not being limitations with restrictions, especially with stability and pre-existing. So don't assume, and I'll conclude, read the policy. And with that, I'll hand it over back to Doug.
Thanks very much, Scott. You certainly covered off all the questions. I was sort of scanning the questions last night just to make sure that we didn't miss anything. We had 18 pages of questions.
Yeah, there were a few.
you, you hit all the marks pretty well. Just a couple of things maybe you can expand on.
Sure.
I know the age 75 thing is an issue for people, and currently the RSA policy doesn't cover that, and a lot of other policies don't. Um, so, what would you recommend people do if they're in that situation? I know there are other options out there, but can you just expand on that a bit?
Sure. Short of the policyholder exploring whether they can increase it, and again, there'll be no doubt cost of that. The other option, especially right now, is basically individual plans. So just because you're over 75, it doesn't mean that there's no coverage available. There are quite a few companies that will go higher. Now, unfortunately, the reality is it's probably going to cost you more. And also, unfortunately, depending upon your medical condition, it's possible you may not be able to get it, which is unfortunate, but it's reality. But the short answer is, if you're over 75, explore the market. There are lots of insurance companies out there, and a lot of them will go over 75. But the unfortunate reality is it is going to be more expensive, and it's probably going to be stricter medical underwriting. And there is a chance, depending upon what kind of medical condition you have. There's no guarantee you'll get it, I suspect you could probably get something, but it may be, again, depending upon each individual, it may be more expensive and there may be more restrictive clauses on it. But I suspect you could probably find something for most folks.
Okay. And I suspect this year, especially in the coming year, a lot of people will be doing their traveling in Canada. And you talked a bit about OHIP in Canada, and can you just expound on that a bit more about what would you do if you were going to British Columbia for a 2-week vacation?
So this is just my personal feelings. If my lawyer was here, this is not formal advice. If it was me, if I was just going to Quebec or visiting someone, would I pay for it? To be honest, probably not, and I'm risk averse. It's not a bad thing to have, but the risk is not as high. However, you mentioned skiing. Now, if I was going skiing, remember the big thing that isn't covered is air ambulance. Honestly, if I was going skiing, I probably would get it just if I broke something and they had to medevac me out. But you certainly can't go wrong having it. No one would ever be upset if they had insurance and needed it. But I think my feeling is if you were going to roll the dice, I'd be more inclined to roll it within Canada. I wouldn't even consider it out of Canada. And as far as what would influence, it would, if I was doing something potentially riskier, such as skiing, I might be more inclined to take it because I'm not the best skier. So,
Just on a separate issue, I've seen several people comment that they've had a claim which was denied, but they had their doctor's note saying they're certainly uh, healthy enough to travel, and their whatever their condition was in stable enough that it should not impede traveling. So people obviously in their mind saying, "Well, that's fine, I can travel then," and then have the claim denied. How does that work anyway?
yeah, and I understand that.
You
Again,
find it when your
the,
doctor says you're perfectly healthy for that particular
yeah,
ailment.
I guess the key is that you have to be healthy, not in your doctor's opinion, but what does the policy say? So, for example, back to that pre-existing. So a doctor might say, I'm not pretending to be a doctor, but say, actually, I'm going to take you off cholesterol medication. You watched your diet, you run 20 miles a day, you've lost weight, you're good to go. Why would the insurance company treat a positive thing? Because I have heard of situations that actually happened. The person went on the trip and oops, he had a heart attack. So maybe with hindsight, he shouldn't have come off. And again, I'm not trying to be sarcastic, but keep in mind, would the doctor say you were good to travel if it was $1 million of his own money on the table? Keep in mind, at the end of the day, it's the insurance company that's on risk. So are they going to be more conservative? Sure. Like I mentioned before, for someone under 70, they could have all, multi trips at 60 days a trip. Think of all the things that can go wrong and the money. And for $160, they're taking that risk. It doesn't take too many claims to eat that up. So the bottom line, even though the doctor says, in my opinion, you're good, but the reality is, whether it's fair or not, the insurance company is saying, yes, but we are the one that are on risk. We are the one that might have to pay out millions of dollars. This is our definition. And unfortunately, the doctor can't override it. So again, it happens. Like people say, my doctor said I was good. Yeah, but you weren't good for the insurance company. So the doctor can't override, if you will, the insurance company criteria. Hopefully that's answered your question.
Yeah, I guess you're still in an unfortunate situation. You think you're okay, and until the event happens, and you find out otherwise. So, could you actually go to your insurance company and say, "Look, my doctor has said I'm okay to travel. Here's a written note saying that."
Oh,
Would they entertain
you can
that at all?
you can try, especially if a claim and that's why I say, no, this isn't legal definitive device or advice. A
Sure.
lot of claims, there can be shades of gray. I've been involved in claims that it's on the fence, shall we say. So you could get an individual saying, yeah, I could see why it would be declined. I can see why it should be paid. So if you have one of those gray claims, certainly if the doctor is backing you, that might be a bit to nudge it over. But as a general rule of thumb, like just to give an example that I gave, the doctor said, you're fit to travel. In fact, I'm taking you off medication. How much more fit are you? That will not override that stability, because the insurance company quite rightly would say it was a change. It was a change for the better, but it was a change nevertheless. And from their perspective, again, they're saying, yeah, but now if it was 90 days later, again, in all fairness, I think you can see where they're coming from. Obviously, nobody is perfect, or else no one can get travel insurance. So they're saying it's not that we're not going to cover anyone that has a pre-existing. If that was the case, they wouldn't have any business. We just want to make sure they're stable for at least 3 months based on our definition, and then we're happy to cover you. But if there's a change, or maybe it's been 60 days and the doctor's opinion saying, hey, if you're good for 60 days, you're good. Unfortunately, that's not the definition of the insurance company. Their definition is 90. And again, at the end of the day, they're the ones that are on risk. So the premium reflects it.
And I guess in this age of COVID, never really thought about travel advisories before, but now they're pretty critical. So if
Yeah.
you're away and travel advisory issued, what should you do?
Uh, Good question. Again, it varies depending upon the policy. I know basically what was happening, with, generally speaking, with carriers in general. This isn't a generalization. Again, this was unprecedented. This has never happened. If there's a travel advisory, typically it's, hey, there's a hurricane in North Carolina, don't go there. This was the first time I'm aware of it. It was like, don't go anywhere. But what if you're already away? Basically, what the industry in general was saying, okay, get back as soon as you can. They were generally giving you, like, I believe something like 10 days to get back. But in my experience, they were being pretty lenient. So I believe, like, if some of the group were running out of coverage, whereas normally they wouldn't, they were letting you purchase top up. So they were being reasonable. But yeah, it's an unusual situation. Most of the carriers are pretty good, but generally, if that happens, what would happen from what I've seen is if you were already um, in your destination, so you arrived on a Tuesday and Wednesday the advisory came out, generally most carriers were giving you something like 10 days to get back. But they expect you to get back as soon as possible. So it doesn't mean that if you're a travel organizer saying, hey, there's a travel advisory, we can get you back tomorrow. And you say, well, I'm kind of already here. I don't want to go back to the cold weather. It was expected that you would get back as soon as possible. The 10 days didn't mean that you could just kick back for a week and eat up the vacation, as tempting as that is. But generally, that's what they were doing. But of course, once a travel advisory was issued and you said, well, I want to go anyway, but you haven't left yet, any of the policies that had that, they simply were no longer selling it.
So I guess the message there is if you hear of a travel advisory, you should contact your insurance company right away and see what they're
Yeah,
advising you to.
yeah. And that was one of the questions, which is a good one. So if it happens, contact the insurance company, check on the websites. Um, and again, I realize that the feedback I was getting, not surprisingly, obviously these helplines where nobody saw this coming were just flooded. It was difficult, but if you're persistent, eventually you would get through. And again, websites, pretty well all the carriers I saw, they were updating their websites constantly saying, hey, we know there's a lot of confusion. Here's what the current status is on the
Okay,
COVID.
Scott, we're running out of time, so I want to thank you on behalf of everybody. This has been really enlightening from my point of view, and I think everybody else enjoyed it too. So once again, thank you. We will have this available on our website on a link set up shortly. So if you want to see it again, or if you have friends or family that would like to see it, just click on the link on our website. And with that, thanks everybody. Take care.